Welcome to another day in the Matrix. This is Waters Above. In today's video, we have a lot to discuss since these past couple weeks of price action in the crypto market have settled in, and Bitcoin is now back into its support zone, still holding on to that 27,000 level, and Ethereum also favoring this $1,800 support zone, and XRP recovering slightly to 47 cents from the 41 cent retest back on May 8th. So in today's video, we'll be going over the technical analysis for these charts and reviewing some key dates to consider that are coming very soon, as well as a basic breakdown of the past 3 Bitcoin cycles phase by phase, utilizing the Wyckoff method. I've received so many questions about this, so today's video should answer those frequently asked questions about utilizing the Wyckoff method for the crypto market from a more macro outlook. You're definitely going to want to watch this one all the way until the end. So if you're new here, we do cryptocurrency technical analysis and combine it with Gematria, Numerology, and Astrology to understand these markets. Feel free to subscribe and turn on the bell notification to stay updated when new videos come out. And make sure to give this video a like and share this channel with other conscious beings to help grow our community. And for those of you that are interested in learning how to decode using Gematria and would like to develop the skills so that you can read the charts on your own, combining Gematria with technical analysis, or if you're seeking coaching for expanding consciousness, you can visit my website, watersabove.com, and check out my crypto mastermind or new expansion mastermind course available now. The link will be in the description box of this video and in the pinned comment below. And with that being said, let's take the clear pill. So just a quick recap from my last video that I had a couple weeks ago. We spoke about the dates of May 17th through May 23rd being packed with esoteric connections. And we also focused in on the prior iterations of the automatic rally cycles for Bitcoin back in 2016 and 2019. Both ending in the month of June. And for those of you that are new here, an automatic rally is a phase in the Wyckoff method. By the way, shout out to the late, great Richard Wyckoff. And this phase is essentially a bull trap. It's a noticeable bullish move that could last several months to even a full year, depending on the chart, depending on the asset. And it's a bull trap because it ends with a lower high in the macro structure and typically follows up with a dramatic pullback, sometimes even a deeper correction than the prior lows in the macro structure. Again, taking several months to even a full year afterwards to play out. Usually an asset matures, increases in market cap, becomes more popular to the retail investor, and as the asset matures, you'll see a lengthening of these phases. But since 2013, 10 years ago, we've watched Bitcoin play out the same phases in the Wyckoff method with the same timing. So I'm just going to quickly explain this all, quick crash course in the phases of Wyckoff method, at least the key phases. So over here, you have these blow off top moments. That would be called a buying climax when buying pressure is essentially exhausted and there's no more buyers left. This leads to a noticeable pullback into a bottoming structure, which we would call this phase a bear market typically, but the lows would be a selling climax. So it's the opposite of what you get over here with a buying climax where the selling pressure is exhausted. Then off of this, you have a automatic rally phase. Now, back in this 2014 through 2016 cycle, it was a very, very nice bull shape, which just led you straight into a new rally. And there wasn't really much of a noticeable, sloppy automatic rally followed by a big spring. And it didn't have that same essence like you would get if you were to look at like a stock with maybe 20 to 40 years of chart history. Remember, Bitcoin was only trading back here in 2010 at a fraction of a penny, and then had just between this move up to this cycle here in 2013, still the most legendary bull run pretty much of any asset to ever exist. And it's continued from that $1,200 to $1,600 level all the way into $60,000, almost $70,000 some years later. So we're working with a very volatile asset. And that's why with the Wyckoff method, we have to remember to just consider the volatility of this nascent asset class called cryptocurrency. And you are now seeing in this movement into the next cycle of 2017 through 2021, a more traditional Wyckoff accumulation phase where you have your buying climax just like you had here, followed by your selling climax, which would be like here. And then you get this really noticeable automatic rally phase. So what I was telling you before about the automatic rally, it is a bull trap, lower high in the structure, followed by a dramatic pullback. And this phase looked much more like what you see with a Wyckoff method schematic. So just to break down how clean these phases were, if you were to look at an accumulation phase schematic on Google Images, wherever you want to search, you'd have your buying climax here, selling climax, automatic rally, followed by a spring. And this is something that we could actually have for the overall crypto market leading into later this year, sometime around September, October, the month of November. And then what this leads to is this moment right here, which is a SOS sign of strength followed by a backup phase, which then leads you to a new bull run or price discovery to the upside. And here in this cycle, we've actually had a repeat of the timing of the last two iterations of these cycles. So what I said earlier is that but since 2013, 10 years ago, which is right here, we've watched Bitcoin play out the same phases in the Wyckoff method with the same timing. So you have here an all-time high, followed by exactly 4 years later, another all-time high, followed by from here, exactly 4 years later, another all-time high. And then if you take from the buying climax to the selling climax, you'll see it's exactly around 1 calendar year. From this buying climax to the selling climax, 1 calendar year. And from this buying climax to this selling climax right there, 1 calendar year. So the phases have been seemingly identical. And with my work, we've taken it one step further, where we started to include the eclipse cycles and the energy of eclipse cycles to be able to dial this in with even more accuracy, determining the direction of the asset. And this would be to solidify when to expect bull runs and bear markets. And bull runs are basically through when we enter solar cycles, and our bear markets or when we enter lunar cycles. So I can't really get into that today. It would make the video too long, and I've already went over this in prior videos. Also, I have tons of tutorials on Wyckoff method in my crypto mastermind course on my website, watersabove.com. So if you want to learn more how to utilize the Wyckoff method, that would be where you can get started. And if you're a little more advanced and you're ready to use the Wyckoff method for trading, and any of my esoteric analysis and strategies for trading, I do have a course for that called the Advanced Trading Course. And I've been getting a lot of people asking about that as well since we've been in this energy lately. Lots of volatility to play off of. So that is, again, on my website. And any Patreon supporters of mine, patreon.com/watersabove, you'll be getting the biggest discount on my courses. So if you were to sign up to one of my memberships, you'll get access to my podcasts and my decodes and pretty much all my exclusive content. We have almost 200 videos worth of exclusive content over there. So that will be an additional perk if you were looking to get more educated in this market and become more self-reliant, to be able to do this all on your own, which is my mission statement for you. So getting back to this, we have now this theory of this automatic rally phase coming in like we saw here, and essentially what we've been moving into lately. And if you've been watching my videos going back to the end of 2022 into the beginning of 2023, you'll hear me talking about this concept ad nauseum. I brought it up in pretty much every single video, every single podcast, every single interview I did to anticipate us moving into the eclipse of April 20th and having a bullish energy. And then I'm going to break this down a little bit further to help you guys even more, because I feel like this is something that could really clear up some of the confusion and questions I've been receiving lately over the past couple weeks. So let's just really closely focus on the automatic rallies and the cycle right here, which topped out in June 2016. Then you have the cycle right here, which tops out in June 2019. And we're seeing a pattern here. Again, very limited data, but since this data is limited that we're working with, and of course nothing is guaranteed, it's still important that we try to find these patterns. We try to identify them and we become open-minded to them. But this is typically how assets move after large corrections. You have these really noticeable pullbacks like we got back here. If you pull from swing high to swing low, we got about an 86% correction. From this buying climax to this selling climax, an 84, 85% correction. And from this all-time high that we're at now to this local low, it was a 77% correction, again, all 1 year after all-time highs. This is a pattern. We got to pay attention to these patterns. So back in late March, a couple months ago, I released a decode called Sell in May and Go Away, and that was a quote, okay? And that's a very popular quote that you hear in the traditional markets. Of course, here we're focused on cryptocurrency, but we're well aware that the traditional markets having big exaggerated moves to either direction could influence the movement of crypto, of course. So that decode, Sell in May and Go Away, was dedicated to the April 20th solar eclipse and this recent lunar eclipse earlier this month that happened on May 5th and May 6th. And just weeks after that, I released a decode in early April. And it was a follow-up or a part 2 to that initial decode called World Reserve Decoded, which was dedicated to the months of July and August, with emphasis on July, since trading into that month marked the end of these automatic rally phases in both 2016 and 2019. And we would have some pretty arduous sideways, consolidation moments, capitulation, before heading into price discovery. So the idea behind an automatic rally is not that we just go straight into a new bull run. We can still have some chop, some volatility, and we could even have a moment like this where we had that C19 crash, and that was definitely a historic moment, something that we haven't really seen in our lifetimes, obviously, going back to Spanish flu at least. And back then there was retail wasn't really actively trading. So, of course, it created different essence on the market. Anyways, that's a side conversation. It's not important for today, but Black Swan events are in the works, guys. I think anyone here who is especially in the XRP community, you're aware of ISO 222. You're aware of, CBDCs and incoming changes with the fiat system as a whole. So because you're educated in that, you can be, I'm sure you resonate with what I'm saying right now. And again, I spoke about this at length on an interview that I did with Bearable Bull. So shout out to Bearable Bull. I appreciate him for allowing me on his channel and allowing me to spread my truth about what I see going on in the markets. It really meant the world to me for him to share his platform. And we talked a lot about this concept of September, October, and there being some sort of black swan, something that could facilitate a large random, what will seem random to the collective, but we will be prepared for what's going on. So this moment right here could definitely happen in the months of September through November. So with this being said, I just want us to again return back to the idea of June and how in the past 2 iterations we did see a little bit of bullish energy into June. Even right here, we got a little bit of bullish energy into early July. This is the weekly chart, by the way. So we topped out into the first week of July and then rolled over. And if you look at our lunar cycles here, you do see that we have in the first week of July a full moon. And that is typically when we enter a more bearish energy. And I'll be reviewing that in a moment. So I was talking about the idea of June and how July and August had what seemed like a bearish implication for the overall market. And that was all discussed in my World Reserve Decoded. Again, if you're a Patreon supporter, you'll get access to those 2 decodes and all my other decodes as well. And again, we have very limited data and completely different economic conditions. And as of today, we're less than 2 months out from July. We have the full moon in July on July 3rd, like I just brought up moments ago. It's a full moon in Capricorn for those of you that are into the astrology, specifically lunar astrology. Again, if you're new here to the channel, we've been utilizing the moon cycle to determine the direction of the energy of the market. And it's important to isolate eclipses. And since we've already went through back-to-back eclipses, it's gonna change the essence of that month-to-month typical lunar cycle. So when utilizing this strategy, since they bring noticeable volatility to the markets, it's important you isolate the eclipses. And to just summarize this, typically after a full moon, we trade up into new moons, and after a new moon, we trade down into full moons. That's the basic concept summarized. So we will keep the July full moon as part of our, a main point of attention between now and then to expect the last leg up for the overall market. And I wouldn't be surprised at this point if we saw the Federal Reserve come out and do something to kind of, bring in some positive energy to the market just one last time. I know we've had some negative things going on with Ledger, and we're not really going to get too deep into that today. I feel like this kind of energy that comes with any of this news is FUD overreaction stuff to spread. And this is what the market maker does, guys. Like, if you pay attention to my channel, you'll know that the market maker loves to manipulate you emotionally. And that's right when they tend to reverse the market. At least the energy is what I mean. So when they give you the FUD, it's right before they plan to inject some liquidity into the market and make it go up. That's how it's been time and time again. The same thing goes in reverse. When it's too happy and there's too much FOMO, they pull the plug. So getting to the dates, for the next 3 days, we have a pretty interesting connection, and it's to Rosh Hashanah, which is the Hebrew New Year. We've been utilizing the Hebrew New Year and the Hebrew calendar in this work for a while now, and it's been very important for this year because we're in the year of Jubilee. Again, if you're new here to the channel, definitely go back, watch my earlier videos. You're going to be filled in on that. So getting to the dates, I just want to share how this September 15th through September 17th is your 3 days of Rosh Hashanah. And going from today, which is May 19th, to the first day of Rosh Hashanah, we have the 119 days, the mirror of 9/11. 9/11 clearly being a destruction ritual, a ritual of chaos, perhaps moving out of this new moon today through these dates could actually have a positive energy for the markets since it's the mirror of 9/11. Now, we talked about this idea that when we are trading out of a new moon, we typically trade down into the full moons. But I want you to be aware that I preface that with the fact that we just had eclipses. So please keep this in mind. We are in a totally different energy now, and we've been in a lunar phase since May of 2021. We just moved out of that. So it's been some time. And if you pay attention to what I was saying earlier about the idea of solar phases and lunar phases, well, pretty much from right here of May of 2021 till here, we've been in a lunar phase, and that marked our bear market. And I made decodes earlier in this year talking about the lunar phase of here back in 2013, 2014, and here back in 2017 of 2019. And you're going to see that's when we do our downtrends. Now, we've just moved into solar cycle as of April 20th. So we are now in a different energy, and overall Bitcoin has maintained an uptrend every single time it enters a solar cycle, every time. And that goes back even further than the data we were discussing today about 2013. So that's what's making me very confident that we still have an opportunity for returning lower for Bitcoin, but based in the all-time data, it seems to be that Bitcoin holds its structure moving forward. It's a very positive thing for Bitcoin investors. Now, as for altcoin investors, if Bitcoin was to return down to 20,000, it could slam the alts really hard. You can see right now, if you pay attention to the comparison of some of the charts comparatively to Bitcoin, where Bitcoin's trading at today versus where some of those altcoins are trading at today. I've been reviewing some altcoin charts that are trading as low as the C19 crash. That's pretty awful. So we can see that there's a much more mature chart here when we're looking at Bitcoin, Ethereum, and we don't see the same level of maturity with a lot of the alt market. And that's me telling you that when we enter solar phase, if Bitcoin has a correction, this could bode very negatively for the altcoin market. Bitcoin can definitely be at 50% dominance by the end of this year, trading, moving up into 52, 54% dominance. And you're all well aware that we have a ton of shit coins that need to get washed away. And I would not be surprised if we have a moment like this, September through November, and that includes a shitcoin washout. Stuff like this Pepe nonsense, it needs to go away. In order for this market to really mature and for this to become, something that actually has some trust from the newer retail investors. And it's not just children playing around with pennies trying to turn them into nickels. No offense, but it's what you all want generally, right? Everyone here who's getting a little bit more savvy with what's happening, they don't want to see these dramatic 90% pullbacks anymore. They want, increased stability over time. And we're not seeing that in the alts just yet. It's happening in Bitcoin, but it's really not happened across the board with too many altcoins. Again, let's get back on track with this, but I wanted to discuss this idea of the 119 and how this could actually be a little bit positive, perhaps moving through today into the next couple of days. And we have been talking about May 22nd and May 23rd for some time now, but to recap May 22nd, it is the day leaving 223 days in the year of 223. And May is technically your third month in the calendrical system. It is not the fifth month. March would be your first, April would be your second, May would be your third. This is more esoteric, okay? So this date would actually be written internationally as 223 in the 223 year, in the day leaving 223 days left in the year. That's 3 connections all to one single day. Okay, so it's really crucial. And if you connect this date to September 18th, which is the first full day after Jubilee, when Jubilee will officially be over, this connects by 119 days. So it gives us this window to consider. Now, naturally, the next day of May 23rd is the day leaving 222 days left in the year. And this date connects to the last Rosh Hashanah. Let me show you that really quickly. We have the 26th of 2022. And this is an amazing find that I had. It's definitely more esoteric, so hang in there with me. But from this day of the 23rd connected to Rosh Hashanah of 2022, which was the end of the Shemitah, or the 7-year cycle, and the start of Jubilee, which is, again, the 50-year cycle we're in right now. These two dates connect by 239 days, which is a little bit more esoteric, but 239 is the 52nd prime number, and 52 is a number we see in Gematria directly tied to the word cryptocurrency. And you could see that right there in the Chaldean cipher. And the mirror of the number 52 is 25. And you could see that right there in the word crypto. You have that 25. And the ticker symbol of Bitcoin is BTC. You have that 25. We're also in the Chinese year of the rabbit giving you that 5225. I know this is a lot, especially if you're new here, but this is what we do. We're combining all these systems into one to have a holistic perspective and outlook of why the market's doing what it does and to anticipate what's next to come. And the main thing that we've been doing here on this channel is giving people the market energy to anticipate 6 months or more in advance. And that's what we've been doing. And I know sometimes when we're doing week-to-week updates and I'm doing my podcast, there's a lot of information. These YouTube videos could be about 30 minutes long and my podcast could be an hour, sometimes an hour and a half. I'm really trying to bring you guys the most value possible and summarize it and do all the hard work so that I could bring you something that has utility. And we could get lost sometimes in the short term, in the micro. And I just want to remind you guys of that. Sometimes it's important when we're taking our notes, look at the big outlook and then zoom out, and that'll keep you much more emotionally in control. When we have these week to week, volatile moves, especially when you're in crypto, it's easy to get shaken out. It's easy to get swayed by news that happens. It's easy to get off your investment thesis. And what do I always teach you guys? Use these tools, use these skills to develop your own investment thesis with your knowledge, your wisdom, and trade that plan. Don't let anything external start to disrupt your trading plan. This is what makes people never sell when we're in bullish energy, and this is why people panic sell when we start to be in a bear market. It's this sentiment cycle that people keep falling for because of the FUD and the FOMO, and they don't have the time or the energy to become self-reliant and develop their own trading plan. This is what I've been doing since the beginning of this channel over 2 years ago, is trying to help people know what it is they're working with in their own finances, with their mission statement in life, their purpose, and apply that structure, that foundation to your individualized trading plan, investment thesis, and stick to that. Never sway away from that, even from what I release or what I share. If you stick to your plan and you are going to be very, very, take responsibility in the process, you're going to see how you start to make some of the best decisions in your life. You might not get the most ROI, you might not get the biggest trades, but you stay winning. And that's really all that matters in the game of investing. So, hope you guys enjoy the words of wisdom. It's important now more than ever. But let's return back to this date of May 23rd. I just gave you so many connections in the pivot date from the 22nd to the 23rd. But now let's talk about this upcoming 9/11. I spoke about it in my podcast that I released this last weekend over on Patreon. Again, Patreon supporters get access to my weekly podcast that I released. The recent one that I made was the longest podcast I've ever done. I really packed it full of gems, so you're going to love that if you haven't seen it yet. But this upcoming September 11th will be the 22nd anniversary since 9/11. In numerology, the number 22 is typically associated with the master builder and master destroyer number. Works both ways, right? So when we look at September 11th, that is the day leaving 111 days left. And if you connect this date to May 23rd, it is connected by 111 days. Of course, the 9/11 ritual happened in New York, the 111. You see the pattern here? And this is the day leaving 222 days in the year to the 22nd anniversary of 9/11. We're getting so many important number connections, power numbers, master numbers, angel numbers, all packed just into a couple of days. And that's the 22nd through 23rd coming up just next week, Monday and Tuesday. So pretty wild. Now, a new date to give you guys out in advance is May 29th. And let me just quickly go to that, and then we'll get into the charts. May 29th is connected to the last day of Rosh Hashanah, which would be here, the 17th, leading into the 18th. So just to quickly talk about this, we have a couple connections, and we're going to break this down, but just talked about that 111. So you guys can see right here, we are attached to the 111. And we have this 23 date numerology, this being on a Monday, the day of the moon. Moon equals 23 in Chaldean. And we have that 23 also tied back to the Hebrew year that we're in, the 5783 Hebrew year, which is adding up to 23. We're in the year of Jubilee, which adds up again to 23. We're discussing Bitcoin as the main energy of this market, again, 23. This number 23 also connects back to Mercury. Mercury is the god of fiat money, money created out of thin air, which is also crypto, and the essence of blockchain technology. It's mercurial. And it's so many other things tied to this, of course. There's Juno, there's Zeus, Jupiter, there's Saturn, Kronos. We go over the mythology a lot, but we don't have the time to get into that in today's video. But I just wanted to show you that this date might be pretty interesting connection, since it's connected to the last day of Rosh Hashanah, which is the ending of Jubilee by 111 days. And it is the start of the 22nd week of the year. You can see that right here, 22nd week, May 29th. And we were just talking about the 22nd anniversary of 9/11, which happened on the day that leaves 111 days in the year. So another connection back to all of this. I hope you guys enjoyed that. If you have anything to share about this upcoming Monday, Tuesday, leading into the monthly close, feel free to share it in the comments section. I would love to know some of your thoughts. And before we get into the TA, go ahead and give this video a like if you haven't already, and spread some love in the comments section. That's what we're all about here. Now let's make it over to our charts. We gave the full-blown 10-year decade Wyckoff example, so we could actually zoom in now. Let's go to the daily and see what we're working with. I'm going to turn on some of this noise, but just pay attention to this parallel channel that we have. Rising parallel channel with a couple anomalies. We have this breakdown here into March 10th. That breakdown had to do with that Silicon Valley Bank collapse. Then we had a quick spring action bringing us another leg higher, which had a top out on April 14th. I spoke about this April 14th date because it connects back to April 14th of 2021 when we actually made a cycle top, and then we traded down into late April, came back up for a bull trap on May 10th, and then collapsed into the lunar cycle. Gotta hold your breath for that one, right? We had this huge correction into the eclipse, lunar eclipse, which essentially ended alt season. If you go back to this moment, that was pretty much the end for most charts. Of course, there was isolated coins that followed ETH because ETH went up one leg higher, just like Bitcoin, but it was barely another higher high. Just essentially a rare bull trap to the upside, and that's obvious because you only had a couple of trading days above prior highs followed by an even larger pullback. So this is a dangerous thing, but anyone who's aware of that 4-year cycle and the way that Bitcoin likes to move, this was definitely a warning sign. So this April 14th date is very powerful for Bitcoin, and we've had a little bit of a correction thus far out of that date into about May 12th. It's a little bit more extended. We've made it through to May 19th today, which is literally as I'm filming this video, we are on May 19th. And this crash date that we got here on May 19th, where Bitcoin lost 14% of its value, after a already 54% pullback, this pullback ended exactly at 9:11 a.m. New York time. So another 9/11 connection for you guys. But here we are, and we have been playing around with this 27,000 horizontal trading range for some time, and I want to show you a couple things. We have this channel, of course, from this prior resistance line, which we broke out, held for a short period of time, only about 2 weeks, broke down into it, got rejected for about 2 weeks, and then came back down to this lower support line. Again, just this one anomaly here, Silicon Valley Bank fail, and we know it was more like a black swan because look at how quickly Bitcoin sprung out of it. It's just a couple of trading days, so it's data to wash people out. It's essentially a washout of leverage traders. Now that we've backtested these supports, I want to return to this Wyckoff concept. And here it might look a little messy, but since I gave you guys the general tutorial earlier, you have your buying climax, selling climax, automatic rally, and a spring. And that seems to be what we're in right now. So this is a 12-hour chart looking at a Wyckoff cycle going back to the local highs of April 14th. We have these blue lines showing you your general resistance and the blue lines at the bottom showing you your general support. And if you were to look, I have a Fibonacci retracement pulled from this swing high to this swing low, a bullish pull. I'm in a log scale, and this chart, this fib setting has log turned on, just a little cleaner. And you could see this 1618 hitting at 34,700. So this would be the bullish idea. We would know it's a spring if we could break back above this 0.5 fib. And even after breaking above this 0.5 fib, we can come down, back test the 382 or hold bullish, back test the 0.5. And then when we start getting above these automatic rally highs, let's just call it $30,000, that would be your SOS. Your SOS is a sign of strength with a backup phase to follow to just retest this prior resistance level. After you have a bullish bounce out of that, you would be confirmed and heading another leg higher, which would be naturally somewhere around $33,000 to $35,000 Bitcoin. So this is the bullish scenario utilizing Wyckoff method in a micro setting. I told you guys with the macro, now this is the micro. It's the same idea. This is a very typical accumulation cycle. Now, you could have a distribution, and the distribution idea would be if you start to break lower than these lows right here, after already cementing somewhat of what looks like a spring, but we tend to actually have a higher low first, then go down. So in most iterations, we actually move up, even if we're in a distribution, and then make another lower high followed by a breakdown lower. And what this is called is a dead cat bounce. So I'm really giving you guys a lot in this video today. I hope you're taking notes, but it would be odd for us to just keel over right now and head lower. Of course, Bitcoin can do whatever it wants in short order because of how volatile this asset is. But I just want you to keep that in mind. We are still in the new moon energy. We could see new moon energy extended up to 5 days out. That would bring us somewhere into essentially middle of next week. It would not be weird for us to make it into like 28.5, even into 30,000. Soon. Going lower now at this time seems a little bit off, but again, we just have to take it for what it is. We know that the month of June is the wild card in my work. I've been talking about this now for probably about 2.5 months. And as we're getting to late May, it's expected more for us to go up than go down. I just wanted to let you guys know about that. So a couple of things now, if I was to turn off all the lines and go to the real analysis here, we have our moving averages. We're going to look at RSI, take note of a couple things. So we have here RSI below 50. That's actually in a bearish posture. The one thing I like to see is these 200s have been sloping to the upside. That's definitely a good sign. This 200 exponential moving average sitting around 25,000. I've talked about the idea of a 25,000 retest, but it seems like on May 12th, we kind of got it with this wick to the downside. All of our moving averages on the daily are in a bearish posture now, except for the more macro ones, the 200s. We could see the 55 has crossed above the 8 simple. That's a wolf cross with downside implied, so that's bearish. We've come up to the 13 EMA, got rejected. That's bearish. So at this time in the short term, this is definitely looking more bearish than it is bullish. And we have 2-day. We're holding on this. This is really tightening now. It would be good to see us start trading above 28K very soon. 3-day, we're holding on that 34 exponential. That's not bad. I would like to be above the 8 simple moving average, and our weekly, we're actually not looking as bad on the weekly. I think this 55 simple is going to start flatlining very soon, and we've been holding the key moving averages, these 200s. I know it's very coiled together, but the 200 exponential and 200 simple are kissing each other around this 25.7 area, which we got the wick into last week on May 12th. So again, good sign, but technically we're in a little bit of a downtrend and a very awkward bull flag if that's the case. And I'm not here to call that out, but you know, that's kind of the way this market has been treating us lately, bull flag after bull flag. So it could be something like this. And again, if you see where that moves us into, that'd be a pretty dramatic test. That'd be bringing us somewhere into the middle of the 0.5 fib and the 618, the bottom of the golden pocket, which is what I actually anticipated to be the end of this automatic rally anyways. Some Wyckoff people out there were just looking at this based on the prior moves where we went into the 786, and I don't think Bitcoin can make it into 50 at this time. I mean, at best, maybe 40, but this range between the 0.5 and the 0.618 is very typical when you're looking at a more mature asset with a lot more chart history. That's about what you anticipate for a bull trap. So not changing my thesis at all just yet until Bitcoin starts trading below macro closures below the 236. So as long as Bitcoin is holding this 236 fib on the macro with weekly closes, I don't change my thesis at all. So here we are on Ethereum. Again, a little noisy. Let's go to the daily chart. And we can see similar story to Bitcoin. Pretty much nothing new to say. So we're going to keep that analysis and just copy it over. I would like to see ETH getting back above this 236 in this micro pull. That would be somewhere around 1820. But you can see a little bit of a descending trend line. We have there resistance coming in probably around this 22nd of May date, somewhere at the 382 fib. Again, like Bitcoin, to be in a more bullish stance, I would like to see trading above the 0.5 so that it doesn't turn into a dead cat bounce. And then you have this key level right here that came in on May 5th, May 6th, right on the date of the lunar eclipse, pretty much right into the 702 fib upcoming. It's around 20, that's around 2000, excuse me. So when ETH started trading above this 0.5 fib in the macro, that fib is pulled from this swing high down to this swing low. That 0.5 fib, we only traded above for about 4 trading days. It didn't really last too long, and then we keeled over. This is really one of those assets that doesn't do that amazing on automatic rallies, but when you look at the overall cycle, ETH has done much better in this cycle than it did compared to the last. So pivoting up 140% off this move and only losing about, 80% comparatively to last time. If you look at this pullback, it lost 95%. I think ETH is showing its maturity, but as for the overall timing of how this all went, this move from this swing low to that swing high, or from this selling climax to this automatic rally, was identical. Same amount of, same fib level. So it's definitely concerning for any long-term ETH holders. This trend to the downside could definitely be in the cards into the end of this year, just like it was back in the 2019-2020 cycle. And if Bitcoin was to make one last leg up, you definitely want to start considering de-risking Ethereum. Obviously not financial advice. I'm not a financial advisor, but Bitcoin moves the market. Now, getting to XRP, it's shown itself to be a little bullish off this bounce that it had back on May 8th, somewhere into about 41 cents. And one thing I wanted to show you that's so fascinating about this code is how XRP traded into 58 cents on March 29th, right there, 58 cents. And then it corrected right here to May 8th. That's the 5/8 date in the Gregorian system, just the regular calendar. 58-cent correction into May 8th, 5/8. And speaking of 58, XRP equals 58 in Gematria. So this just shows you the code, like how fascinating this all is. But now it's making me think perhaps 58 days after March 29th high could be a identifier for the next thing to consider for XRP, and that would be May 26th. So just consider we traded into 58 cents, then came down to our microcycle lows on May 8th. That's 5/8. 58 days off of that 58-cent price brings you into May 26th. That's sometime next week. So just keep that in mind with this repeating pattern. It would be very amazing to see XRP do something into May 26th, which is a week from today, next Friday. Now, because of this bounce, we really don't have a whole lot to say here outside of the fact that we could pull this quick fib, and we have this 382 level to get above. That's where you'd want to watch out for a swift move into about 50 cents. Once you could recover the 382 fib, you enter a automatic rally, and that gets you into this golden pocket territory, which is just another lower high. So we have this key level around 52 cents. It's from these rejections back here in September, October of 2022. We rallied into it very, very quickly this March, got rejected on these final moves into the solar eclipse, keeled over. So this is a very, very important level around 52 to 53 cents. You do not want to disregard that. Now, if XRP, can start trading above that level and holding it as a support, that would be very, very bullish, because it has not really traded above that and held it as a support going all the way back to January of 2022. So just to keep that kind of stuff in mind, guys, we're looking pretty good. I think we're like on 7 straight green candles for XRP. The RSI is not looking insanely overheated by any means. It's only at 55. There's tons of room to the upside, and that's just the daily chart, meaning if we're looking at the more macro candles, the 3-day, 2-day, weekly, etc., we're only about 50 on these charts. Yeah, just about 54. So this is looking pretty good on XRP. It would be great to have XRP make its final leg up and match what we've seen with at least Ethereum, which would be somewhere into the 0.5 fib, and that 0.5 fib level in the macro. If I just delete this, you'll see it is right there around 75 cents. That would be like if it caught up to ETH, and actually ETH got slightly above the 0.5 fib, which would put you into about 81 cents. And that's the level that I've been talking about for weeks, months now. This isn't me playing a bias. This is just it catching up to what Ethereum has already done, the leading altcoin. We have a lot that we went over today. I'm going to leave it at that. Please meditate on some of this stuff. I know it was a lot of information. I took last week off because of some personal things that were coming up, so I wanted to make it up with this video. Hope you enjoyed it. Hope you took a lot of notes, and definitely watch it again. If some of this stuff was over your head, it will make sense to you. Trust me. Anyone can learn these methods if you just pay attention and, well, invest your attention and take notes. Take this seriously, because this is not a time to be missing out on some of the greatest information and knowledge that is available about an asset that could be extremely profitable in the long term. And we have so much to grow in this space. I mean, just the fact of how unaware the average person is of crypto, it makes me actually extremely bullish on the future of crypto for anyone who's involved today. So, ending on some positive notes, I appreciate every single one of you. Wishing you a beautiful rest of your day in the Matrix. Much love.